OptionChampion.com.
Welcome to Tricks of the Trade on this Saturday. I'm Rick Adams. You can't see me, but I'm here. I am not in the studio today. I'm in my office looking to see how I can get set up for next week. These last couple of days have been pretty ugly in the markets, pretty brutal, some pretty big sell-offs. Fed officials announced a 75 basis point rate hike this week, and that sparked recession fears that just pummeled the markets over the last couple of days, pushing the Dow below the 30,000 level and the S&P 500 below the 3,700 level. Those were levels that were hit for the very first time back in 2020. Financial networks, publications, they're calling those levels the June lows because they were lows that were recently hit, that being in June of this year. But prior to that, they were levels that were hit for the first time in 2020. So we're back to 2020 levels, essentially. All the gains have been erased this year. The Dow alone is down 7,000 points from its all-time high that was reached in January of this year. And the S&P 500 is down 1,100 points from its all-time high, also reached in January of this year. So it's pretty ugly out there, and I'm looking to see what I can do to get some orders in. I might not do anything at all. I'm looking to find out. I might do something with just a few of my positions, or I'll just leave them all, just let them all run and see what happens. Who knows? But Antero Resources AR, I am short 3 October 31 puts. I opened the trade on September 9th with 42 days until expiration. I sold the 3 lots at 65 cents each for a total credit of $1.95 or $195 in option terms. I've got 27 days left, and with the being short the 31 put, I need the stock to remain above that $31 strike. And for the most part, it did stay there. It was looking pretty good. This is where I got in. Like I said, stock was around, it was $40.14 on the close. I don't remember exactly where the stock was when the order was filled, but on the date that my order was filled, the stock closed at $40.14. So when I sold the 31 put, it was $9.14 out of the money, pretty far away. That was a good distance. It was safe. And as we can see here, going to the right of this vertical line, it kind of pulled back a little bit, popped higher, pulled back, had a nice spike here, hit a high of $42.39. The chart says $42.38 right there on the label, but I saw $42.39 in the historical data, so I put a white line there marking the $42.39. And then it just started bombing and traded sideways and fell more. And then it gapped lower here. There's a big gap. And it finally broke below the 31 strike of my put option. And so the trade's going against me right now. Closing price yesterday, $30.73. So that's 27 cents in the money for my 31 put. That's just slightly in the money. So with 27 days left, I'm not all that worried about it. I was hoping to exit this trade for 32 cents. It's currently marking at $2.65 at mid-price. So that's a long ways away from the 32 cents that I needed in order to exit this trade. With 27 days left, I think I'm just going to hold on to it, see if it breaks above 31. We're bound to get a rally next week, with these last couple of days with the markets getting beaten down pretty hard. I'd like to think buyers are going to jump back in the pool and, push prices up again, at least for a few days before selling off again. And if that happens, like I said, I'll probably just wait it out and see what happens. If it stays above 31, I'll let the option expire, collect the entire premium as profit. If it continues to pull away from the 31 strike, then I don't think there's much that I can do aside from closing the position out and taking a loss. I may just let it expire in the money. I'll get assigned 300 shares on the stock and then write call options against it for premium. So I think that's the idea there. Block, formerly known as Square, SQ, I have on a short put vertical spread that's $10 wide. I am short the November 60 put and long the November 50 put with 55 days left until expiration. When I put the trade on, I collected $2.48 in credit, and I was looking to exit the trade for $1.23. It's currently marking at $4.78, so that's also far away. And so the short 60 put is the side of the spread that has the most risk. So I need the stock to remain above that 60 strike, and it did stay there. There's the blue line marking the 60 strike right there. It was there. It was working out. Yeah, there were some pretty nasty days here and there. This is a 30-minute chart, so there were some pretty nasty candles in 30-minute intervals before finally breaking below the 60 strike. So this is currently in the money by $3.73 with the closing price of $56.27 on Friday. So, but with 55 days left, almost 2 months, I'm just going to let it be. I'm not going to do anything. I'm just going to wait it out. And, if it shoots back above 60, then that's great. For the short leg of the spread at the 60 strike. So nothing there. Suncor SU, I talked about this one in last week's episode. This is the long stock position where I added a long put vertical spread as a hedge. Let's see. I have 200 shares of the stock at an average price of $31.90. And I'm short the November 30 put for a $1.85 credit. And I was looking to exit that 30 put for 92 cents. It's currently marking at $3.90 mid price. So well beyond the 92 cents that I was hoping for to close the trade. So there's my average 31. This should be $31.90. It says $31.91 because I also factored in commissions that I paid for the trade. So that's the average price of the stock, that blue line there. And then this blue line down here is the strike, the 30 strike of the short put. And I am well below that. This is way in the money by $2.80. So not terribly in the money, but it's further in the money than I would like. I have a conditional order in to buy an additional 100 shares of the stock at $31.75. That is the price trigger that I have on the conditional order, meaning that right now the stock is at $27.20. So if it rallies back and it rallies up to $31.75, then this order will be submitted. So yeah, I'm going to pay more than where it is now, but I'm doing that to achieve a specific average price per share on the stock. If I do get filled for an additional 100 shares at $31.75, that will bring my average down from $31.90 to $31.85, which would be 10 cents above the market price of $31.75. What all that means is I want to get an average price that's close to the price in the market. so that there's not a big gap between the market price and my average price of my position. So if I achieve an average price of $31.85, stock continues to rally past 32, let's say $32.34, which is what I initially paid when I opened this position, then I can sell off all my 300 shares at $32.34, which would be above the $31.85 average, and I can profit and be done with this position altogether. So that's the plan there. I'm just looking on another screen. I've got some notes in my trading journal, and I think that's it. So I think that's it for this episode. That's what I'm going to do. Antero AR, I'm not going to do anything. I'm going to wait, see what happens over the next 27 days until my 31 put expires. Block, formerly known as Square, not going to do anything. I got 55 days left. And Suncor SU, this one that's up now on the screen, I've got my conditional order in, and so I'm just going to wait it out and see if we do rally back above, or rally above the 27.20 where the stock is trading now, and hopefully this will all work out. So kind of a messy episode, but again, I'm working feverishly to figure out what I'm going to do for next week. That's it for this episode of Tricks of the Trade. I'm Rick Adams. Thank you very much for listening. See you next time.